of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, it's the D-Day. All eyes are on the Union Budget, which will be presented by the Finance Minister Nirmala Sitharaman in just a few hours from now. Now, since this is an election year, it is going to be an interim budget, a temporary financial plan covering the government expenditures until a new government really takes over. A full-fledged budget will be presented after the formation of the new government following the 2024 Lok Sabha elections. Now, an interim budget is often associated with populist spending since it is preceding an election year. Now, so will this be a big populist budget or will it be a prudent budget this time around? That's the question that will be answered today. Will there be big bang announcements or will it turn out to be a non-event is something that we will ask our experts. What is it that markets are looking at from the interim budget and what is it that you as stock market investors should be looking at from the interim budget? That is what we will be discussing in this special edition with all our experts as well. I'll be joined by very special guests to share their expectations pretty shortly. Meanwhile, our reporter Tanya Aneja is with us. Tanya, morning to you. Big day. Finance Minister is going to be presenting interim budget in hours from now. What are the big expectations?
Absolutely, Sakshi. Very good morning. And it's a big budget day today. I'm standing in right outside the Bombay Stock Exchange, and the thing is that there are low expectations this time around. Experts believe that market will wait for the regular budget and general election outcome before getting bullish. But however, it's going to be a capex focused budget this time around. Focus would be on infra and rural. If you talk about investors, they want rationalization of capital gain taxation for domestic mergers. They also want, removal or reduction of securities transaction tax, that is STT. Now, PLI schemes could be extended to other sectors as well. This is also one of the major expectations. They also want FM to elevate double taxation on the dividends. This is also one of the major expectations, and FM should also encourage the Indian IPO market through ease of listings and taxations. Apart from that, of course, railways and defense. These two sectors will remain in focus because government is likely to announce 40 to 45% allocation of the procurement budget towards the defense companies. Remember, many stocks of the railways and defense sectors have turned multi-baggers already with up to 500 and 600% return in the past 6 months. So, of course, the focus would be on these stocks as well today. And lastly, power utilities and renewables. These sectors would be in focus too because a lot of expectations there. The government is likely to, extend its support to these sectors like power, utilities and renewables. So stocks from these sectors would be in focus too.
Absolutely. Let's go across to my other colleague Chetan Bhutani now, who's standing by. A few hours for the interim budget to be presented. Chetan, what is it that you're hearing in as far as the road transports and highways are concerned? Is this going to be a clear focus because the government has pushed for higher capex in the previous budgets and that has clearly impacted the infrastructure growth story? Is that going to be on top of the radar?
Well, absolutely. If I come to the numbers here, 23 lakh crores is the number that the Narendra Modi government has spent only on infrastructure, especially allocation going towards railways, highways, and of course the road sector. This time, in fact, around, we are expecting a 25% hike in the highway sector allocation. Remember, last time the government actually allocated about 2.70 lakh crores, and this time it's likely to cross the 3 lakh crore mark for the highway sector. So 3.25 to 3.30 lakh crores is the number that we are expecting. The highway budget in the last 10 years, remember, has been up literally 9 times. And of course, with the elections coming up, the government really wants to push up the highways game. And of course, more Bharatmala Pariyojana projects would be given more approvals in the time to come. So clearly, a record allocation for highway sector. Of course, it's an interim budget that we have to remember. But yes, the government would be keeping its focus on the highway sector as well.
Right, Chetan. Thanks a lot for that update. Let me now introduce our managing editor, Siddharth Zarabi, who's now joining us on the show. Siddharth, good morning. It's a big day. We've been all waiting for this. Tell us, what is the macro picture really looking like right ahead of the Finance Minister will be presenting her 6th budget at a time when there is still a lot of global uncertainty. There are wars that are happening. There is an inflation problem that the world is still, dealing with at this point in time. But on ground, domestically, when we talk about the taxes picture has been pretty rosy. So we have that fiscal flexibility at this point in time. What sort of a budget are we expecting today?
Well, clearly, this is a budget that is being presented in the backdrop of very good, resilient performance by the Indian economy. Budgets sometimes have to be presented in times of great economic stress or upheavals. I think India has weathered not one, not two, but three storms post-COVID. One was the supply shock that impacted inflation all across the world and within India. The second shock was what happened on account of the Russia-Ukraine conflict. And the third shock that continues to peter out is what is happening as far as US interest rates are concerned. And just ahead of the budget, we have seen the latest FOMC decision also that will provide some sort of guidance to our market. So in this backdrop, I would say that Prime Minister Narendra Modi's 10th budget, the second interim one in 10 years of Modinomics, is going to, as the Prime Minister said clearly yesterday, provide a policy direction. What have we picked up in terms of the broad numbers? We will see, as expected, fiscal consolidation and continuing glide path commitment. The second will be, in fact, the biggest number that will be looked out for will be the nominal GDP number, 10.5 earlier, revised to 8.9. We are waiting for the final number. So growth, deficit and the borrowing number. Remember, this is a vote on account, but the central government's expenditure and its commitments will only increase after being tweaked in the full budget. So that is the third number that we will be looking forward to very, very closely. And of course, what priorities are indicated just ahead of the Lok Sabha election. And in that, it's clear from all available indications and sources that we will see some of the welfare programs, possibly including the farmer allocation, the wage creation allocation, and likely higher allocations as far as women are concerned. So that's the broad macro backdrop. This is one of the best times that a finance minister could have presented a budget, and there is of course a massive political momentum for the government as it goes into full-fledged Lok Sabha election season. Sakshi.
Absolutely. So that is the big expectation from the interim budget. Thanks a lot, Siddharth, for sharing all that update. And we will continue to seek more insights as we move in closer to 11 a.m. when the Finance Minister will be presenting her budget speech this time around. We're also joined by our special guests now. Karan Bhasin now joins in, an economist on the panel. We also have Rahul Arora, CEO, Nirmal Bang of Institutional Equities, on the show with us. Very good morning to both of you. And thanks a lot for taking the time out for this discussion. Karan, let me start off with the macro picture with you as well. A very strong fiscal balance sheet welcomes right ahead of the budget, good tax flows, much in control as far as the twin deficits are concerned, and the fact that when in 2024, India will also be included in the JP Morgan bond index. How do you see?
Well, I mean, the broad theme looks like nothing can go wrong, right? I mean, you're getting everything right. Your growth is on track, and as we showed in a recent article, India's excess growth has never been this high. So you're growing in a very challenging environment, and that itself is a big achievement. But it's precisely times like these where you have to kind of be careful, because when everything's going right, you don't want to make any errors. And in that context, I think even though the tax revenues have been healthy, but the fiscal space that is available with the government is not as much as many people are expecting. And I think that essentially what we are looking at is going to be a very smooth fiscal consolidation path, gradually getting to say 4% in 3 years' time rather than doing it in 2 years and so on and so forth, which looks kind of more likely and palpable at this moment. And even with that kind of a fiscal consolidation roadmap, what you would find is that the space for capex still remains, because instead of doing it in 2 years, you're now doing it in 3 years, and that's more credible as well. Because the beauty in India's macroeconomic scenario at the moment is that India's fiscal position looks much better 4 years down the line than today, largely because, with the pace at which we're adding more and more taxpayers, the pace at which more and more people are seeing fall under the tax net, essentially you're looking at a phenomenal fiscal situation going forward. And why would any government not want to capitalize on that and actually go slow on the consolidation so that growth can take care of some of the consolidation part of the fiscal roadmap?
Right. Rahul, very good morning to you as well. Let me come to you now and bring you in the conversation. Even if it is an interim budget, Rahul, is there a possibility that Finance Minister may actually pull out a rabbit from the hat and come up with changes that may impact stock markets positively? What are your own hopes and expectations from this interim budget?
Good morning, Sakshi. Thank you for having me on the show. So, obviously, with this government, you don't know. They can choose to surprise the markets as and when they feel like. But I think, Sakshi, if you look at the last 2 tenures of this government, while the budget is a very important event, I understand, but there are so many announcements that happen between budgets that they've sort of at some level reduced the importance of the budget to a very large extent. And of course, post GST implementation, a lot of those taxation tweaks that used to happen, those don't happen. So I think the government, it is very possible that they'll choose to wait. I think the reason they will choose to wait is because of the state election results. I think they themselves will be fairly confident of returning back to office. So I think the bigger budget will be tabled in the month of July, as typically is in every election year. But I think what she may say or do rather is talk about policy continuity. She may actually drop some hints about what July may actually hold. And I think that itself could be enough for the market's directional standpoint. But actual big bang announcements, I think we'll probably have to wait for a few months for that.
Right. Karan, given that the government has been very vigilant on fiscal prudence path, do you think that that will only continue, or that we can expect more populist measures, especially ahead of elections this time around?
Well, I mean, the best indicator for this is to go back in 2019, and the expectation back then was also that even though it's an interim budget, you would see some populist announcements, and you did see some of them. In particular, you saw the PM Kisan program being rolled out. But even as they did that, essentially they were very responsible in terms of the overall fiscal management within that interim budget. So I think it's reasonable to expect that while there might be some announcements, essentially it would come in a very responsible manner so as to not, kind of deviate too much from the fiscal roadmap that the government had in mind. And the reason why they would want to do that is because it's, as I said, you're in a challenging external growth environment. And essentially, if you're in this particular scenario and there's a external crisis that affects your growth, at our present fiscal deficit levels, we really do not have the space to kind of, do what we managed to do during the pandemic. So that would, to a large extent, make policymakers a bit more uncomfortable. And that might actually result in the 2024 interim budget to be a bit more conservative than relative to the 2019 interim budget.
Enough. Karan and Rahul, stand by with us. I'm now going across to my colleague Karishma Sudani, who's been standing by on the ground to give us the live action right there. Karishma, good morning to you. Big day, what are you picking up from your sources? Are we really going to be hearing some big bang announcements from this budget?
Well, I think Siddharth, Karan and Rahul were giving a good detailed view about what could be expected when you look at the macroeconomic indicators, especially on the fiscal deficit point of view and the real and nominal GDP. But Sakshi, what I'm picking up is that though, Finance Minister Nirmala Sitharaman has recently said that don't expect any spectacular announcements coming in, and as it's only a vote on account budget, let's not forget it was for the past 4 vote on account budgets that government had introduced major tax reforms. It was in fact started in 2004 when Finance Minister was throughout the vote on account budgets has been talking about some kind of major tax cut changes and policy reforms. So that, if it rings a bell, looks like vote on account budget equally stands important in a way that government may roll out some important details today. What we are focusing on in today's budget, which I think Finance Minister and Prime Minister Narendra Modi has also said repeatedly, is that the focus is going to be on 4 main groups. It's going to be on youth, on women, on farmers and on the poor. So expect social reforms on that, but keeping in mind that there is fiscal consolidation path maintained and give way to populist schemes by, of course, keeping in check all the macroeconomic indicators.
Right. Thanks a lot, Karishma, for all that update. Come back to you a little later to understand what is really happening right there outside the Finance Ministry. Let's get back to our discussion with our top guests today. Rahul, let me come to you now. Which are the key sectors that would be in focus in this budget, even if no big bang announcements? Do you really see continued focus on sectors like infra, rail and defense that have been on top of this government's radar?
So when you talk about capex, Sakshi, I think our own economist and deputy head of research, Riza, expects that the fiscal deficit number, the print that will come out will be about 6.1% for this fiscal, and the projected number would be somewhere around 5.5, 5.6% for next year. What this essentially means is that the kind of growth that you have seen in government capex, of about 30-35%, that may actually come off. So I think private sector will have to do the bulk of the heavy lifting from here. We ourselves are projecting, or are estimating rather, that the capex announcement by the government would be in the tune of about 14 to 15%. That seems like a reasonable number. So I think even with a 15% capex, it could land up being a good year for cement. I think because a lot of the projects that have been announced in the last couple of years will see fruition in the next year or two. Also, remember, Sakshi, the road orders have come down quite substantially from the NHAI. I think that will probably pick up, in the second half of this year as well. So I think anything to do with road construction and cement, valuations, I don't think are very supportive of PSUs and defense right now since you raised it. So even if announcements come towards that, towards those sectors, I'm not sure how excited the market will be from a valuation standpoint. But I think the most important thing, Sakshi, especially in the backdrop of the recent state election results, will be, it's that $1 trillion question now. How do you revive rural India? Because, you had 2 years of a pandemic that has been, followed by a situation of very, very high inflation. So there's been almost no savings. And, when you look at the volume growth numbers of leading FMCG companies, they're still in very low single digits. So I think there could be a push towards, reviving the rural part of the economy. And I think proxies to that could land up being good plays. So I think these are some of the sectors. As a vision, I think they will continue to focus on things like decarbonization, electric vehicles, which has been a pet project for this government, and I think there'll be probably more announcements to that effect. Whether they talk about extending the FAME subsidies and other things. So I think the big visionary things, when you talk about disruption of technology, which are like 4, 5, 6 years out, those may see more announcements that facilitate those. But the short-term ones, I think that I told you, more along the lines of road, cement, and anything to do with rural India, those might actually be reasonable proxies from this interim budget, and even so from the next budget presented in July.
Okay, rural spending, cements, roads, those are the sectors that Rahul is betting big on. Karan, looking at what is really happening in terms of capex, that's been the top of the radar of this government, a significant growth driver of the economy so far. Do you see them having room for further upping it this time around, especially for the rural revival?
I mean, the real constraint now is not really fiscal on the capex side, it's also your ability to execute projects. And there's a constraint from the private sector standpoint, right? Like even if you can award more projects, how much can the private sector really deliver? So that's one part. And the other point is that, or the other part of the puzzle is how much can the government actually manage in terms of awarding of new contracts, monitoring of those projects, ensuring effective execution. So I think we are somewhat in that position where the capacity constraint at the administrative level might become binding. And in that context, even if you allocate more money for capex, that administrative constraint might prevent you from spending it. So that's the real issue there. I mean, of course, we need more and more infrastructure, and the sooner we can build it, the better. But India is a federal system, so there are obvious constraints both at the union and the state government that
Right.
are becoming more and more binding as we reach that level.
Okay, one last question to you. We just have 30 seconds on the show. Karan, your top ask from the finance minister.
Well, I mean, if I were to make one possible policy request, it would probably be a implementation of the direct tax code, not the tax schedule, but the direct tax code, because simplification of the tax code itself would save both taxpayers and government a lot of time spent in litigation, and that itself would yield rich dividends to everyone. So, and it's basically something that can be done in an interim budget. Essentially, it's about simplification of rules and clarification of definitions.
And thanks a lot, Rahul, for being with us on this very special edition and sharing with us what your big expectations are right ahead of the interim budget. We will connect with you once the budget has been presented to take your views on how did you rate the budget after it's presented as well. Many thanks. Hope you have a good day ahead, and we will connect with you later on. With that, ladies and gentlemen, it's a wrap on this special edition, but action continues on Business Today television. On the other side, Market Today, the budget special edition follows, and we will be speaking to top market experts to really understand what are their expectations are from this budget, the strategies that you need to adopt right ahead of the budget speech as well. Coming up in just a few minutes.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for